Welcome traders. So today we are going to be talking about top-down analysis. Okay, and this is something most of you have heard of, but most people don't actually understand how it goes. Basically, let me explain it in a nutshell. What top-down analysis is talking about is how you look at the higher time frame down to the lower time frame to make your analysis or to take your trade. So it's just like looking at the bigger picture before coming back to the fragment or the smaller part of it to take a decision. Are you getting me? So that is what top-down analysis is. So the major thing you need in top-down analysis is to understand the time frames you are working with. Okay? And if you are here, I must have already taught you, you must have already seen my video where I spoke about the 6 to 8 rule of time frame combination. If you have not seen it here, I'm going to drop a link for that right now for you to go and see it. It's very important for you to understand that before you learn about top-down analysis, okay? Because we're going to be using multi-time frames for it, okay? And personally, I like to use at least 3 time frames for analysis. You can make it more if you want to, but 3 basically is okay for you. What we are going to do is that we're just going to pick a random market, because most times you see that most of these traders or people that are teaching you here, they mostly planned what they want to teach you. So I don't want to make it look like I planned whatever I want to teach you today. So I'm going to swipe on this. So let me just swipe. Let's swipe up. And it ended at AUD USD. So let's look at the USD. So the first thing, okay, the time frame I mostly use, because I'm a swing trader, I use daily, sometimes I use weekly. It depends on how long I want to hold that trade. So I'm going to be using the 6 to 8 rule, which is daily 4 hour 30. Okay, daily 4 hour 30. I won't be able to explain it in this video if you have not watched it. Go and watch the video so I actually understand it. Okay, 6 to 8 is telling you that any time frame you pick, divide it by any number between 6 to 8. Okay, so if we divide daily time frame, convert it to minutes or seconds, then divide it by 6 to 8, it's going to give us something around 4 hour. Okay, between any number by 6 to 8, 6, 7, 8. The optimum, the minimum of it, the middle of it is going to be 4 hour. Okay, and if we divide that 4 hour again by any number between 6 to 8, it's going to give you something about 30, within 30 minutes or so. So we'll pick 30 minutes. I've already explained it in that video. So I'm going to be using daily 4 hour 30. Okay, we can try to use 5 also if we want to. So we'll go to daily time frame. Let's look at AUD USD. So in daily time frame, what do we first see? What do we see in this market? I can see that it's trending downward. Okay, it's trending downward, but then the market is not actually setting off the position it's going to. Okay, and if I also look, I see something that look like a key level here. So that look like a key level that the markets have actually failed to break here. But in general, what we are seeing here is a downtrend. My bias for now is downward. Okay, downward. But what I'm going to do is I'm not going to use all those concepts, so much concept on this other block, breaker block, and all those stuff. I'm just going to base on just price action for you to actually understand this. Okay, as you advance, you're going to understand how we can actually employ other blocks and all those other methods in trading these kind of situations. Okay, but I'm just going to stick to the very, very basis, just the basis for you to actually establish direction. So what we're going to do, what we first notice that this market is actually what? It's actually trend in a downtrend. It pulls back up, then and this is what is happening right now. So if this market is retracing now, where do you expect the retracement to end? We expect the retracement to end somewhere around here. Are you getting me? Somewhere around here. So this market could or is likely to actually what? Get up, either respect this zone or this upper zone here. Are you getting me? So what it means is that in that time frame, yes, we're in a downtrend altogether. You should have that in your mind, okay? But then if you are looking to take the trade in, let's say, 30 minutes or maybe a lower time frame, you should understand that the bias in those time frames are going to what? Be going up, okay? Because it's undergoing a retracement in a higher time frame. This is fragility of the market. We have already discussed about that. I've already talked about that in my previous videos, okay? I'm also going to tag it right now. So we are undergoing a retracement in the higher time frame. So what we do now, let's go to a 4-hour time frame. Because we already have a direction, okay, that we are looking at from the daily, what we are going to be looking at now in the middle time frame is probably a zone that supports that direction. We are going to be looking forward for reasons to go in the direction of the higher time frame. Now you also have to put in consideration the kind of trader that you are. Okay, what I'm teaching you right now is for swing traders. The time frame I'm using right now is for swing traders. If you want to day trade, you could be using a lower time frame. So your higher time frame could be 4 hours, basically. If you want to day trade, it could be 4 hours. Sometimes it can be daily, it just depends. Okay, so if your higher time frame is 4 hours, your middle time frame is going to be 30 minutes, while your entry time frame is going to be somewhere around 5 minutes or so, if you are a day trader. But if you are a scalper, of course, your high time frame might be around 15 minutes, 5 minutes, 10 minutes. Then your middle time frame is going to be probably around 4 minutes. Then your lower time frame is going to be in seconds. So it depends on the kind of trader you are. So you have to put that in consideration when you're looking at this. But the main thing is that your last time frame, the third time frame, the higher time frame is where you get your bias. Okay, so from the higher time frame, we know that we're actually looking to go long because the market is making a retracement in its downtrend. We can actually go long from there. Then the 4-hour time frame, we're actually seeing a support zone, which you can also use to go long. Now, in the last time frame, which is the 30 minutes time frame, is where you're going to find your confirmation. When we mean confirmation, I mean your candlestick confirmation, break of structure. Are you getting me? Okay, so when the markets come back to this portion in this 30 minutes time frame now, I cannot be looking for probably a break to the upside, change of trend to the upside, a break of trend to the upside, probably a candlestick confirmation that is going to help me to take the trade at this, because I've already narrowed it down, okay, that the market is going to go long with my higher time frame and my middle time frame. So you understand? So the main thing is that the higher time frame now is where you get the bias. Then the middle time frame, you can now look for a zone that you want to use. While in the last time frame, you can now look for confirmation. So bias, zone of entry, confirmation, that is basically it. So let's try another market. Let's try gold. Okay, so if we look at this for the daily time frame, what can we see? We see that gold is in a beautiful uptrend. What it does, it tells you that our bias is going to be what? It's going to be long. Okay. Now, I told you that sometimes you can find a zone. Okay. Sometimes the higher time frame can present a zone for you. Okay. You can see that this zone is actually going to be very important because it's coming from the daily time. So sometimes daily time can give you a zone, but most times you can actually find this zone also in the 4-hour time frame. So when you know that our bias is what? Is long. So let me denote that with an arrow. We are longing. We are looking to long the market because we are following the trend. So we go down to the 4-hour time frame. What do you see? Okay, basically, just like I told you, even in the 4-hour, you could have seen the zone. So if I did not draw that zone now from daily, I would have also seen that zone in my 4-hour. While the last time frame, which is the confirmation time frame, is where you find your confirmation. The last time frame, the last one, which is 30 minutes time frame, is where you find a confirmation. So if we are not looking at this, we already know that we are looking to go long. At what zone? I look to go long probably at this zone, if the market can come back to this zone. But then if the market does not come back to this zone, it's also going to create another zone for us to enter. Are you getting me? But I'm very, very sure that this market is very likely to come back to this zone before moving back up. Okay, because there's something that looks like a liquidity here that you should take. Okay, so if we go down to the lowest time frame now, the lowest time frame is where we now look for those candlestick pattern, probably a candlestick pattern, okay, or if you're using SMC or that block, is where your zone is going to be refined to. So this 30 minutes time frame is also where you're going to see the change of trend to the upside. So when the market comes back to this portion and it starts breaking to the upside and the market change, this is where you can actually be sure that okay, the market is actually moving your direction already. Then you cannot take the trade in that direction. So you get, so this is it. So the major thing I just want you to understand is that the higher time frame is where you find the bias. The middle time frame is where you get the zone. While your last time frame is where you get your confirmation. Now, as you proceed in trading, you are going to be able to alternate this. Okay, you must not follow daily 4-hour 30. No, you can also play along with other time frames along. Sometimes you can decide to look at, okay, let me look at what's happening in the 2 hours. Let me look at what's happening in 45 minutes. You can start to do that. But then, if you're a beginner, just at least learn how to use these 3 time frames first. Eventually, before you can now start playing along with the other one. I can use basically all the time frames. In fact, looking at the 4 hour time frame, I can tell you what the daily time frame is doing also. Okay, so that is for that. And don't forget if you're a beginner with trading and you're confused about trading, the FSC trading ebook is your key compass to trading. We have the beginner, intermediate, and the expert session, okay? And it has basically everything I teach. Okay, everything I teach is also embedded in that book. Is your compass to trading basically. If you don't need a mentor, if you don't want a mentor, if you don't want somebody to teach you directly, you can just get the book and the book is going to teach you everything I teach. But if you also want to speak with me directly, that is, have me as your mentor directly, there is a link in the description where you can message me directly. So we'll talk and I'll guide you through the process of trading by myself, face to face. So now let me also show you, how it's different, okay? How trading setup is also different for different people, depending on the kind of trader you are, okay? Because swing traders are going to be waiting for this exact thing I spoke about. They're going to wait for this 4 hour zone. But the day traders might not. For the day traders, the 4 hour time frame now is their bias, is their higher time frame. So if you look at this now, in this 4 hour, I said market zone, you're going to tell me that this market is ranging. What it means is that the market is neither going up or down. Okay? It's neither going up or down. But then if you look at it well, is this market heading down right now or heading up? If you actually look at it here. Okay. Touched here, touched here, touched here, touched here, touched here. And what's next? Market actually was very likely to touch here. So the bias for this market now according to 4 hour time frame mostly is what? Is to go short. Are you getting it? The bias for this market according to 4 hour time frame now is to go short. So what do you do now? In the 4 hour time frame now, you now know that okay, you are looking toward to short this market. Now you understand that you understand why it's going to be different for both swing traders. When swing traders can say, okay, buy this market, okay, a day trader can actually be selling. That is how it is. So the 4 hour time frame is telling you that our bias is still looking to go downward. You get me? So if we go to the 30 minutes time frame, which is the middle time frame for the day traders, you're going to see what zone are you seeing here? Which zone can you actually look out for here to push this market down? If I look here, okay, if I want to use an order block, I could use this. I could use this zone, okay. If I want to use support and resistance, generally in resistance zone, I could use this zone. Okay, now any of this zone could actually work. If the market breaks this order block here, the next thing is going to call for is that resistance zone. So let me mark the order block out. The zone you are looking at here now in the 4 hour to take this market short is what? Is either of these two. Okay, now which one do you know is going to work? Which I can say is actually going to work? We can't say for sure, okay, but there's 70% chance of it respecting this order block and falling down, and there's also about 80% chance of it respecting this bigger time frame altogether and falling down. So any of these two could actually work. If you take a loss here, then you expect that the second one would hold. Okay, of course, nothing is 100% in trading. Both of them can actually still get broken. Remember that. So any of these one could work. It means that what? These zones now are where we are going to be looking forward our confirmations. Okay, and which time frame are we going to be looking for that confirmation? It's going to be the 5 minutes time frame. Remember 6 to 8 rule. If you divide 30 by any number between 6 to 8, if you divide 30 by 6, it's going to give me 5. All right. If you divide it by 7, I think it's going to give me something around 4 or so. If I divide it by 8, it's going to give me around probably 4 or so. So you look at it now, you see that okay, this is where you can actually be looking for this market to go short at. So this is it. And you see that the bias could actually change depending on what the kind of trader that you are. All right. So this is it, guys. This is it for today's video. I hope I'm able to educate you. I'm able to teach you something today. Okay. Don't forget to like and subscribe so you stay updated whenever I drop a new video. Until we meet again, guys. Peace.